What's up, guys? My name is Andre, and in this video we're going to be covering the Weekly Open Retracement report on edgeful.com. So this report, number one, what it looks at is the weekly opening price. So that's Sunday 6 p.m. Eastern time price. You can see I have these blue lines, which are my weekly open trading view indicator. If you want to get access to these indicators, we have over 35 of them. You can go to the right side of Edgeful, right over here, and then put your trading view username in this area, and then you'll find your trading view username by clicking this button up top, and then my username is Edgeful, yours will be whatever it is. Once you put that in this section over here, you're going to see in your indicators section the invite only appear with all of the indicators. The one that we're using here is the weekly open. So let's look at what this report measures. The sessions that here are actually very important because here we're looking at the New York session, and this is only tracking when price retraces to this weekly opening price within the New York session. So where it opens is very important. Let's use this example here. This was last week on YM. Here it automatically plotted for me is my opening price right over here. Then you can see that price in the New York session opens above. So all this price action does not matter. We're only looking at this New York session. This is our market sessions indicator. You can put on other sessions and see what they look like. But here we're looking at the New York session, and you can see it opens right over here. So we're opening above the midnight opening price on Monday. And that would put us in this category right here, opened above the weekly open. Now you can see that on Monday it retraced back to touch this line, which would mean that it did retrace when it opened above. Now it did touch at this point. I just want to reiterate, this is completely ignored. It's only the price action from 9:30 to 4 p.m. So in this case, this entire week counts as retraced because it opened above and it touched. Even if it just touched and then bounced for the rest of the week, it would still count as retraced. Now, let's go here. Another example of price opening right over here above the weekly open and coming back down on that Monday. So now, as soon as this gets touched on Monday, the rest of the week is like pretty much ignored because it already touched that price. So it doesn't matter if it touches it multiple times. It doesn't matter if it touches it once. It counts as retraced. Now, in a week like what seems to be this week, it has not touched the opening price at any point. So in this case, it opened below, which would be in this category here. And then it did not touch, and it doesn't seem like it's going to, this weekly opening price. So this is an example of where price did not retrace in the New York session. Now, if you want to exclude a certain day, we're going to talk about the customizations here now. If you want to exclude a certain day, like you want to exclude Monday, now what you need to understand, first of all, the data has obviously changed very drastically. And what that would actually look like on your charts is if you exclude Monday, your weekly open stays the same. But now you're using Tuesday's opening price to determine whether we opened above or below. So this entire section is ignored, and now it's as if we start the week on Tuesday. So this week, right over here, would count for opened below and did not retrace because price did not make it back up here. Now in this case here, this week, because Tuesday opened above, so now we're completely ignoring Monday. This is the opening price. We're completely ignoring this. And you can see here that Tuesday opened above and then did retrace. So this would count as a opened above and then retraced. So that is how the customization works. You can include or exclude certain days. Now, the bi-weekday variant of this is really important. And this will tell you only the weeks that did retrace. This is only covering the weeks that retraced. So in this case, what I imagine this week here is not going to retrace and touch. This week is not going to be included here. This is telling you of all the days that did retrace to that opening price, which weekday was it? And almost 80% of the time it's going to be on that Monday. So pretty much if it doesn't happen on the Monday, you might not want to expect it to happen on the Tuesday or Wednesday. And if it hasn't happened by Thursday, you definitely don't want to expect it to happen on Thursday or Friday. So pretty much the higher probability area is going to be obviously Monday. And then if it doesn't happen by Wednesday, just don't expect it to happen. Like this week, you don't want to expect something like this to happen. So that is the weekly open retracement and the by weekday. Obviously, one of the ways to use this is primarily on a Monday morning. Now, some people will look at the gap fill. Some people will look at the outside days. Some people will look at the opening retracement. Like this is a pretty good example, actually, this is actually a great example here, where if we turn on if we look at the gap fill, that would be right over here. That green line is the gap fill. And then we have the midnight opening price, which is actually above in this case. But these are certain levels, like in the other example, which I'll actually just go back to quickly, just so I can show you what exactly I'm talking about. Let's see if this is a decent example here. Oh, it actually falls in line perfectly with right here. So this is another great example right over here. Let's look at the gap fill. Let me plot the previous session's close. Let me plot the previous session's close. Okay. So what you can see here is this is a Monday. Price opens above. It opens above the weekly open, which is this thicker blue line. It opens above the midnight opening price, which is this thinner blue line, and it's opening above the gap fill, and it's also opening above previous day's high. So in this case, you have 4 different reports that are giving you a bearish bias to take price down into this area. So that retracement. So this is one of the ways that you can use this report. When it lines up like this, it's always the best. Like in the other example that I was showing you before, when something is above, something is below, it's not as nice. This is actually a pretty incredible example, like pretty cool that I found it here, just so I can show it to you guys. But this is one of the ways where you can use it, especially knowing that Mondays are going to be the days that are going to retrace most often. You really want to hammer on this on a Monday. So if you have any questions on this, please reach out to our support right over here. And please subscribe to the YouTube channel. It really helps us out. And you'll see a bunch of, honestly, all of the valuable content that we release around these reports.